This is Smart Investing with Michael J. Wren.
Beautiful, smart, funny, successful.
Like one of those tops.
Not to mention drop-dead sexy.
Securities and advisory service offered through KMS Financial Services.
This is Smart Investing with Michael J. Wren.
He's an entrepreneur. He's currently meeting with investors in the hopes of starting an organic gourmet hot dog truck.
And Michael's co-host, Chris Martin.
You better get on board the Chris train. Chris train!
For I have the pride, the privilege, nay, the pleasure of introducing to you the one, the only.
This is Smart Investing with Michael J. Wren.
Hello, everybody. How are you doing this fine day? You're listening to Smart Investing here live at News Talk 590 KQNT AM and AM 1280 KPTQ. I am Mike Wren, your host, where we try to take the topic of investing. Oh, by the way, since he had so much accolades in that introduction, my co-host, Mr. Chris Train.
I'd use it at least once. It's a good soundbite.
Exactly.
You can scoot over a little. I got it.
No, I wanted to make sure that I make it into the camera.
You did. I got everything all
I
set.
think that you're cutting me out of it.
You can't see because of the way I've got it monkeyed up there. So.
Oh, okay. Yeah, it's fine.
You will see. Because we are adding it, for anybody that doesn't know, we're adding video to our website. So people can see that we're not like, when they call up, flipping them off or doing little puppet hands. And blah, blah, blah. Yeah,
we don't actually do that.
We don't.
We do that to each other.
This is kind of proof that we don't.
Not to the callers.
The courts wanted video proof that we're in the studio. So
Very good. Well, this is your investment show where we try to take the topic of investing. We try to make it easier to understand, number one. Number two, we try to get you good, relevant information on each and every show. And thirdly, we try to be entertaining. And we're kind of getting the hang of it. I think after a decade, Chris, we're finally finding our voice a little bit.
It's fine-tuning, but it's taken a while.
Yeah, we don't. Nothing like a slow learner, which is me. And I'm not telling you that Chris is that way. It's probably all my fault. So, yes, we are gradually finding our voice. I'm even finding my voice with my industry now. I just have relegated myself to the fact that I hate them and they hate me.
But that makes it easier.
Yeah, makes it easier when you know where
you know who your enemies are.
You just know. Everyone. Everyone.
Who should I trust? No one. Well, that narrows down the field.
Yeah. So on today's show, I was trying to figure out how to make today's show different, but also make it an extension of the last two shows that we've been talking about and so on. And I don't know if I succeeded or not, but we'll give it the old college try, as they say. So how has this week treated you, Chris, before we let's get this train slowly going?
I told you I found out my limit on children is my boy had a couple friends spend the night, and my youngest one, my son.
Okay.
And the youngest one had a couple stay over, and it was, 6 kids, 12 hours. That's my limit. That's where I got to stop. I don't know how Mike Brady didn't come home and just start beating kids with a sack of oranges, I got to tell you. But one had a little problem in the living room and ended up vomiting on the carpet, and, of course, they're kids, so they caught the couch, too. And so, it was about 1 a.m, so wild night at the Martin house.
Wow.
Yeah.
Wow.
And they stay up all night playing like Modern Warfare and all the game stuff. So
and
all
screaming.
night you can hear and gunshots going. I might as well, I don't know, live in some place that rappers rap about, because that's what it sounded like all night. It was like a college party with guns last night.
Yeah, those first-person shooter games are quite something now, aren't they?
Well, and it's weird because he can talk to his friend who's like 3 miles away. They can talk to each other over the Xbox.
The headset thing?
Yeah.
Yeah. Mm-hmm.
So it's weird when your kid's in there all by himself talking. Now, they've got that. Before, I was sent away.
I could actually take this show on a whole nother tangent if it wasn't a family show.
Thanks, because the delay button is way over there.
Okay. So there's a lot going on in my industry. Pretty much none of it that I like. So let's start out. We'll get things going slow here. I'll give you the contact information. Number one, you can always Google me. WREN is how you spell my last name. You could Google Smart Investing Show. You could Google Michael Wren. You could Google Worst Broker on Earth. Not sure where I rank, but might be in there. So
don't Google me, because apparently I married Gwyneth Paltrow, and I have a crappy band somewhere.
Sweet.
We do, if you are on the internet, if you go to smartinvestingshow.com, we have a poll still going on our site. Do you feel the economy will be better, worse, or about the same in 2012?
What's it at so far?
Right now, 26% is better than better in 2012. 15% is about the same as 2011, and 60% say it's going to be worse in 2012. So,
really,
at least we know our listeners.
Well, and what's sad about that is we are usually optimistic. And even with an optimistic bent of a show,
that's just not getting to our listeners.
That's how people still feel.
We're not doing a good enough job, I think, of being positive.
No, it proves my point that I could probably tell you exactly how I invest money over these airwaves, and none of my competitors could copy it, and most of you wouldn't be able to follow through either, because your emotions won't let you, which is a good thing for me. Yeah, it means that I'll always be gainfully employed.
Thank goodness for bad news, because now I'll always have a job. All right.
Yeah, and thank goodness for crazy people.
Yes.
Okay, so let me get into the show. So you can find us on the web at smartinvestingshow.com. You can Google me. You can Google the show. Been in the industry for, I guess, 21 years now, maybe 22. I'm kind of losing count. I mean, what's the point after a time? And
feel the same way about marriage.
Yeah. Telephone number here to the studio. This is the important one. If you want to ask a question live and be on the air and have fun, 509-241-5900. Again, 509-241-5900. That gets you live here to the studio with your question or your comment. And you can also call me at my office if you care to. That number is Wren, for Wren Investment Management, spelled W-R-E-N, 888-747-5181. So with those, if you care to, you should be able to get a hold of me straight away today. Okay, in my industry, let me just kick it right off. This is most of the time. I'm using generalizations, but this is my take on it. Obviously, my show, my take. My industry is trying to sell you three things, or one of three things. My industry is trying to sell you annuities, it's trying to sell you mutual funds, and it's trying to sell you something in this category that I've entitled wrap accounts, separately managed accounts, and asset allocation strategies. Okay, basically, let me explain that to you. Annuities, you probably have heard about them. I know that you don't understand them because they're hard to understand. Mutual funds, you think that you understand them, and you pretty much do for most of the stuff. And I know that you've heard about them a lot. Wrap accounts, separately managed accounts, asset allocation strategies, and so on. What is that? That is when you go to somebody and they tell you that using a scattergram and using standard deviation and looking at alpha and beta, they're going to select a group of 8 to 10 to 12 funds, modeled portfolios that should fit what you want to do as far as your risk tolerance and your goals for the future. And I think it's complete rubbish, trash, whatever you want to call it. Those are the FCC-approved words that I can use today.
Thank you.
I just got the list. That's what my industry's trying to sell you. My industry wants to charge you a yearly fee for the wrap accounts and mutual funds and wants to earn big commissions on the annuities that you don't really ever see. Okay? That my industry has retreated from the position of trying to make the investor above average returns, and you, the investor, pretty much have ceased to think that that is even possible. Furthermore, many investors now think that average returns are impossible, and my industry thinks that average returns are the goal. Here's another statement that I'd like to just throw out there, maybe see what you think, maybe get your take on it. My industry for the last 20 years has kind of gone down this road. Let me back up a little bit. If you go back 20 years ago, 25 years ago is perfect. 25 to 30 years ago is perfect because I've been in the industry 20. So right about 20 where there started to be the sea change of these mergers of these big financial companies. Up until that time, after I make this point, Chris, we'll go to break.
Okay.
25 years ago, you used to have definite lines of demarcation separating the banking industry, the insurance industry, and the investment industry. So much so that if you went to talk to your banker would say, yeah, I really wouldn't listen to the insurance and investment people out there. You know, they're just too risky, too high, whatever. You'd go to the insurance guy. Yeah, your bank doesn't pay you any interest, and they probably don't understand the new wave of what's going on, and your investment guy probably is too risky. They just want to trade your account all the time, buy, sell, buy, sell, buy, sell. I wouldn't really listen to them either. And your investment person would say, come on, insurance guy, who wants more insurance? Banker, that's done. You need to talk to me. The other two don't know what's going on. So you had this fight between the three major arms of the financial services industry, okay? And everybody had a banker, had an insurance person, and had, if you had the assets, you had a representative from one of those three factions, we'll call them. Okay, one of those three armies. Then all of a sudden, you started having mergers, acquisitions, banks buying brokerage firms, banks buying insurance firms. There was this big notion in the financial services industry. It's like, hey, guys, let's quit fighting. Let's put our arms down. Let's put our weapons down. Let's quit fighting each other. Let's just merge so we can offer a client one-stop shopping. And we'll all laugh all the way to the bank. And the client should be better off, too, because there is some little bit of an overlap. And once we have somebody at a bank that's able to talk to somebody about a CD or about a mutual fund or about an annuity, we've hit the holy grail, because now we can offer this person everything. And no matter what they want, we can offer it to them. There's not a big sales pitch involved. They're already at our desk. It's called cross-selling, by the way. And if you, the bank tellers, will gladly shove the people that come in with bigger checks rather than smaller checks, if you'll shove them to one of these representatives, we'll kick you a little bit of a finder fee too, and everybody's happy and the client gets served. That was the whole. I just gave you the big secret of the boardrooms of these companies 20, 25 years ago. That was their big secret. Let's just merge and acquire everybody. That way we can offer anything that you desire. The problem is they were thinking from a sales position. You, the investor, don't know what you want, okay? It'd be like hospitals merging together. Now, when the patient comes in and asks for these medicines, we can give them any medicine that they want. Well, the patient doesn't know what medicine they want. They just want to feel better. They haven't a clue. So right from the very, very beginning, things were wrong. And 20 years hence, 25 years hence, I would tell you that my industry is further away from the point of actually being helpful to you than it really ever has been, because the stuff that they're talking about with you all the time can only be helpful up to a point. There's some definite disadvantages to any strategy. Has advantages and disadvantages. My strategies and so on, they're not the holy grail by any way, shape, or form. But I will tell you that I actually have some strategies, not just some sales pitches, like the caller last week where they went out and talked to 4 different people, and 4 different people tried to sell them 4 annuities. So I'm telling you the truth. That's one thing, is I'm not painting my industry too negatively. It's what's happening. So I'm going to try to pick annuities, mutual fund, wrap accounts, try to pick them apart, tell you their weaknesses, tell you how a little bit that where my thinking is different, where I think the thinking of my industry is flawed, where I think the thinking of you, the individual investor, you're emotionally flawed. It's okay. Everybody is. But in my industry, it's a little bit harmful than most of the time. In the jewelry industry, it's actually helpful if you're emotionally flawed. An emotionally flawed person will probably buy more jewelry for more people over their lifetime than a non-emotionally flawed person. Would you agree?
I guess. Yeah.
Different people that they're like into at different times.
Yeah. You just keep having to buy them things.
Well, I'm thinking 3, 4, 5, 6 marriages. That's 3, 4, 5, 6 wedding rings, unless you just kind of quit at the end.
Just give up. Just give like a wedding stick and just say, hand it to the next bride when she comes up.
Like a baton?
Yeah. Whoever holds the baton is my wife, because it's just not worth going out and getting the rings.
So it's a little bit of dark humor here, but I think it's time to take a break. I've got some notes, not enough notes for 2 hours, so I'm going to have to expand on these things a little bit. So I'm Mike Wren. This is the show Smart Investing. You're listening live at News Talk 590 KQNT AM and AM 1280 KPTQ. Telephone number here to the studios, 509-241-5900. We'll be right back.
Okay, fellas, nerd it up.
This is Smart Investing with Mike Wren and Michael's co-host, Chris Martin.
Less nerd, more English.
It is a radio show where many thousands of people, unless the show's on, where many tens of people are listening.
Tens of people are upset right now.
Yeah, they could have the phones that work. And I know that you're saying, well, Mike, you could give out your cell phone. Yeah, I could.
Oh, yeah. I'd rather you give out yours than mine. We do have an email. In fact, we're going to get to an email from a listener in the next hour. But if you have a question, you absolutely need to ask us. smartinvestingshow@gmail.com. Or I'll keep an eye on our Facebook. If you're on our Facebook, Smart Investing Show, Mike Wren, look it up. Or you can look me up, Chris Burr, and I'll be there. Ask it on Facebook. Ask it in our mail.
Yeah,
we can still get to the questions.
Yeah, since the phone is down for Lord knows what. Yeah, Lord knows whatever.
There's no one in the building. It's weird. Alan Justice hasn't walked by, and usually I see him all the time, and it's a little weird. I feel like something happened, and no one's telling me. Like, by the way, we're fumigating. I hope no one goes in the building this weekend.
Oh, that plastic wrap on the building meant something.
You know that weird striped tent thing that you had to crawl through to get into the studio? I wonder what that's for.
So anyway, if you've tried to call, we're probably making a big deal out of nothing because the 15 listeners don't all call at once. Come on. So
who has the phone this week?
So if you do want to get a hold of us, that's how you get a hold of us. Okay. So let me end this first hour that when you, the investor, and my industry are busy fighting the last war, you're not ready for the next war. You're fighting the last war of attrition of a 10-year horrible, horrible cycle, and you won't be ready for a recovery. Most people aren't ready for a recovery. My industry isn't ready to talk to you about a recovery. My industry is just willing to talk to you about safety, safety, safety. Well, there comes a point where in my industry there is no safety. There is no there's only defense up to a point, okay? I tell people, listen, one thing is a constant when you talk to me. There's no guarantees. When you're talking to me, there's no guarantees because I'm an investor. We are looking at the future. Nobody can tell the future. We're trying to be practical about it, but it's just like if you were a farmer, you can't tell the future. You can't tell somebody that everything's always going to be rosy. Some years have very little rain, okay? I'm telling you the same thing, that things aren't always going to be rosy, but geez, people are taking things a little bit to the nth degree. So while you're busy talking about wrap accounts and annuities, things that have such high fees and have you so widely diversified, you're not targeted enough to participate in what I think is a recovery of common stock prices. It's as simple as that. Most mutual funds are too big and have too many investments to them, or they don't pay enough of a cash flow to you to allow you to reinvest it efficiently over time. Annuities have the same weaknesses of mutual funds, compounded with the fact of much, much higher fees, but the annuities people love to talk about what's called the guarantees or the living benefits that are available into those annuities. Don't you think that those living benefits and guarantees, don't you think they come at a price? You have to give up something to get that stuff. What do you give up? Performance. You give up the ability to actually participate. And I'm trying to couch this in the most very, very gentle way possible. But you would come to me in my office because you want me to try to make you money. Not for a guarantee, not for a birthday card every year, not for the best customer service, not for the most gentle bedside manner in the world. You would come to me because you want to grow your wealth. You want to make money. And right now, it's pretty apparent that we can't. It seems commonsensical to me that if you own too many funds, we can't grow your wealth. And if you own nothing but index funds, we can't grow your wealth because you're not going to have the intestinal fortitude to leave those very volatile index funds alone. You're going to start making those same buy, sell, wrong decisions just one step removed. Instead of making them with an individual stock like investors did 30 years ago, you're making them with funds. So you're going from the frying pan into the fire if you're trying to find an investment strategy that really weeds out all of that bad volatility because it's weeding out the good volatility too, okay? Volatility is exactly what you desire as an investor. The thing that everybody talks about on CNBC where volatility is getting worse and worse and worse, well, guess what? What I hear, it's getting better and better and better. Because if somebody's a reasonable person that runs an auto dealership, they're always going to have reasonable prices on their cars to try to sell them to you. If the person is a sociopath at the car dealership, some weeks the prices are going to be so high that they're laughable, and a few other weeks of the year, they're going to have prices on those cars so low that you actually have to find the money to buy one because you're buying that car at significantly lower value than you would ever get a chance to because the owner's a sociopath. It's wonderful. You profit from other people being crazy.
It's about time. Man, it's about time. Because I have not profited from crazy people lately.
That's why volatility's good. Finally, I found an entertaining bent on this instead of it being all serious. So when we come back to the second half of the second half of the show, I'm going to try to tell you why it's a little bit easier to get a good deal from a crazy person than a reasonable person.
We also have emails. I know, I just went through puberty for like the 17th time to send. We have emails from JC and Diane. We'll try and get to those the second hour.
Oh, okay, very good. Okay, you're listening to Smart Investing. I'm Mike Wren, your host. Second hour is only on one station, News Talk 590 KQNT AM. You can also find me by Googling me, Wren, spelled W-R-E-N, Wren Investment Management. I always answer the phone at the office, 888-747-5181. We'll be back.
Any opinions expressed herein are given in good faith and are subject to change without notice and are correct only on the stated date of issue. Past performance is not always indicative of future results. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Security, financial instruments, or strategies mentioned may not be suitable for all investors. Prices, values, or income from any investment mentioned in this report may fall against the interest of the investor, and the investor may get back less than the amount invested. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as a recommendation of particular securities, financial instruments, or strategies to you. Before acting on any recommendation on this material, you should consider whether it is suitable for your particular circumstances and, if necessary, seek professional advice.